Welcome to the Passive Income Podcast. Yes, it's been a little while, but thanks for coming back. And joining me today is Jesse Franklin from the beautiful state of Indiana. Jesse, go ahead and give yourself a bit of an introduction.
Hey, thanks, Dave. Glad to be here with the posse. Yeah, so my name's Jesse Franklin. I have 30-ish years in the finance and estate planning industry. Uh, Started off working for an estate planning firm, and then worked for a larger company, insurance company. They wanted to change from just being an insurance company to more of a financial group. So went on there as a sales manager and designed some products and some services that could help them grow. So
Nice.
been around for a little bit.
Yeah. Yeah, we've both been around the block, that's for sure, right?
Yeah, yeah. So it's been fun. I enjoy it. Of course, I guess you could say one of my hobbies is I do a little bit of swing trading, some options trading. I mean, I have my retirement portfolio per se, but kind of a fun hobby is maybe finding that hidden gem stock and see what we can do. And then I do options trading for some passive income.
Nice. Nice. That's awesome. So, okay, I guess I have a few questions. First, has your whole career been in Indiana or have you moved around the states?
It's all been in Indiana. Now the company I work for is out of Cincinnati, so once a month we have to travel to Cincinnati a little bit. But yeah, it's been in Indiana.
Yeah, but that's pretty close, right? Indiana to Ohio. That's not too far away.
Yeah, Cincinnati's an hour and a half drive. Yeah, it's not bad at all.
Nice. And so are you still working or are you like semi-retired or
No, I still have a 9 to 5. Um, but I enjoy it. So
right?
that's always the thing when people talk about their FI number and all that is just because you hit it doesn't necessarily mean you have to quit work. You know.
Yeah, you
Um,
people still need something to do, right?
yeah, exactly. How's your new business going?
It's growing. Thank you for asking. And yeah, it's less than 6 months old. I think I won that one contract, which is about to make the business much busier. It's 7 days a week. So I'm definitely gonna. I have a couple guys lined up to do some part-time casual driving for me while I'm doing other runs. So basically, this 7 day a week contract is a north to south run, and then I do a lot of east to west runs as well. So it's
Awesome.
good. It's like I said, for a business that's less than 6 months old, I'm happy with the growth.
Good deal. So I know you do a lot of passive investing. So are you just using that to build, or are you living off that passive income and then just using the business for additional income?
Yeah, basically, I'm focusing on growing the business more than anything right now. So sort of passive income in the background, let it do its thing, and not worry about it. Um, that's obviously sort of the best way to go about it is like not look at your portfolio.
Yeah, right. It's hard not to, though, right?
Yeah, so hard not to.
Well, good deal. Good deal. I'm glad that's working out for you. It's always fun too when you can work, I guess, for yourself versus an employer. You control your destiny at that point. I mean, it could be good or it could be bad, right? I mean, if you don't get the contracts, then it's tough. But then when you do, you got that freedom to do what you want when you want.
Yeah, exactly. So this contract that I won, basically the profit margin isn't great, but the revenue is really good. And that's sort of why I bid so low on it, was to just get that constant revenue stream. Because as you can imagine, I'm sure any startup business, like cash flow is extremely important, just having that constant income of cash. Now, also, don't get me wrong. There's things I've done in the last 6 months where a few months later now I'm like, oh, I wish I hadn't have done that.
Yeah, I mean, when you're starting off, cash flow is king, right? Obviously you have to be somewhat profitable, but yeah, you don't need to look for those home run profit margins. You just got to get your name out there and
Yeah,
survive.
yeah, and that's just it. So this other north south run where I'm saying the profit margin isn't great, but the revenue, there's also an opportunity to pick up more business along the way to do this back and forth which will then generate some profit on that run. And then my east-west runs have been profitable. People have been honestly paying me more than I was expecting to be paid for them. So it's like, okay, and they're happy. They're repeat customers too, right? And I
Yeah.
think that speaks volumes as well, right?
Oh, absolutely. If they're willing to pay more for your service than what you think your service is worth, and they keep coming back, I mean that's a positive.
Yeah,
Definitely not
exactly.
negative.
Exactly. All right, let's get into some of your career. And so 30 years or nearly 30 years or 30 plus years, estate planning, tax services. And we are coming up to that time of year, right? In both Canada and the US, time to file your taxes. And every year I'm like, didn't I just do this last year?
Yeah, I can't speak for for the Canadian, but yeah, every year, it's that time from it's usually starts about the end of January because the United States they have a law that if you work for somebody they have to have your W-2s or your 1099s to you by February 1st. So that's when people really ramp up and uh, and then through May,
Yeah.
is your deadline.
So in Canada, it's called a T4, and I just got one because I still had an employer last year. I don't think anybody can see the numbers on there if I just flash that in there quickly. The numbers aren't very big on that one. So I did have an employer last year, and it is called a T4 in Canada, but similar. I'm not sure. I think it might be the same January 31st or February 1st that the employer has to have them to the employees for the previous year. And then I think our tax deadline is different. I think the US is April 15th and Canada is April 30th.
Okay, so you guys get a little bit more time. Yeah,
Yeah, 2 weeks.
yeah, yeah. It's I don't know our tax system. I mean, I could go on and on about it, but
Well,
the
please
part
do. We've got as long as you want to take here.
the
I'm
part that
here.
doesn't the part that doesn't make sense to me is if you're just a W-2 employee, you work the 9 to 5, for company ABC. I think a person filling out a tax return or paying the money to do a tax return is ridiculous. I mean, the government knows how much you make. They know
Yeah,
how much your employer withheld to send it to them. So they know your tax. They know your marginal tax rate. They know your tax bracket. More than likely, they know you're married. They know how many kids you have. Why we have to go through this whole system um, to tell the IRS how much they either owe us or we owe them?
right.
It, I know a lot of probably tax people are going to say, oh, it's hurting our business. But I mean, at the end of the day, I mean, there's a cost to doing it. And it's not cheap, especially, a person that might not get a huge tax return back. But I just don't understand why our government can't get it figured out. I mean, obviously there's complicated tax situations with self-employed and everything else, but
Yeah,
your standard 9 to 5 worker, it should not be that complicated. And I mean, really, honestly, I mean, all a tax return is for us is a interest-free loan to the government. So I don't
hmm
know why they just can't, get it close enough to where,
yeah.
you know,
I've said the same thing about here in Canada. It's like very similar. So you mentioned the IRS, which is obviously the US body, and in Canada it's called the CRA, the Canada Revenue Agency, but essentially the same idea of if you have a T4 or like you say a W-2 in the US, it's they already know. They know. So
they know.
and then it's your responsibility to tell them and not make a mistake on what they should already know. So
Exactly. And the part that cracks me up too is like people that get a tax return, the government, the IRS, well, we'll send you a check or direct deposit when we feel like it, when we get around to it. But man, if you owe them money, if you
you
miss
better
that,
get that in on time.
if you miss that date, there's penalties and everything else. I kind of find that funny, and I even know people that owed money, and they're like, man, within 24 hours, the IRS took their money, but anytime they owed me money, we didn't get it in 24 hours. So I mean, I'm sure just like you up in Canada, nobody likes to pay taxes, and it's an archaic system that in this day and age it shouldn't be.
Right. Yeah. No, I tend to agree. So, okay, speaking of taxes, now let's get into tax dollars and where they're going because obviously in the US, there's quite a stir up there with Elon Musk and the Department of Government Efficiency. And I actually just posted a reply this morning on X saying, can Canada borrow Doge for a week or two?
Man, I mean, the government just, it's massively overspends. And don't get me wrong, there are services that we need,
Yeah.
by our federal government, but the bloating is crazy, and yeah, we'll see what Doge does. I mean, at the end of the day, I mean, it's those people look out for each other. But some of the stuff they've uncovered is pretty interesting. And then again, at the end
Oh
of the
yeah.
day, who's telling the truth and who's lying, right? I mean, uh, but some of the bloating is just, I mean, this is probably an unpopular opinion, but we have the United States Postal Service. Anymore, the only thing you get in the mail is
junk mail.
Junk mail. Most companies, everyone's on paperless billing.
Yeah.
But the thing is even if you do send something through them, it's a crapshoot whether it's going to make it. In fact, if it's going to make it there in time. In fact, even Indianapolis made the national news. There were some packages that sat limbo for like 3 weeks just in Indianapolis, their hub to sort mail, that they didn't know where the packages were. And the part that gets me is the U.S. Postal Service last year operated negative $80 billion. Now,
And yet you have very profitable companies in FedEx and UPS.
Sure, and FedEx
paying
and UPS,
great dividends, by the way.
paying good dividends. Now, sure, FedEx and UPS, they do charge more. And I'm not saying, some people say, well, get rid of the Postal Service. I'm not saying we have to get rid of the Postal Service, but it should operate as a business, and they should at least, I mean, I'm not saying they should be break even, but like, how are we overspending $80 billion, and then we still can't guarantee that the overnight letter you send, or even the small 3 or 4 pound package, makes it to you, Dave, if I send it to you.
Right.
I mean, the spending, and if you break down all the departments, the spending is just, it's redundant. We have departments to overlook departments, and it's crazy. I mean, the amount of spending is crazy.
So there's another actually interesting. So if you were to send me a package through the United States Postal Service, when it gets to the border, it would be taken over by Canada Post. And similar situation, not overly efficient. But if you were to send me a package with FedEx or UPS, it stays with FedEx or UPS until it gets to me.
Yep, they keep they keep full custody of
control.
it. I think DHL is pretty much the same way too. I know it's not as popular here, DHL, but I know internationally a lot of people like DHL.
Yeah, I've used them all. They're all pretty good. So
now, is your postal service up there? Is it efficient, or is it just like the U.S.'s? It's pretty bloated tax dollars. And
well, here's a little quick note to let you know what people really think of Canada Post. Is right prior to Christmas, like 3 weeks before Christmas, they went on strike for nearly 3 full weeks. Maybe it was over 3 weeks, and nobody really noticed, because, like you said, the only thing that really comes in the mail is junk mail. And sure, there were small businesses that were complaining because they were like trying to send out packages, like small retailers that use Canada Post for their online purchases. But at the same time, at the end of the day, they're not high and dry, because it's just as easy to pick up the phone and schedule a FedEx pickup or whatever. So
sure, interesting.
Yeah,
went on strike and no one noticed.
It doesn't really bode well for them, right? When you're on strike and it's like nobody cares.
What were they on strike for?
What's the only reason anybody ever goes on strike?
Oh, money.
Yeah. Yeah. So
they want a raise, and then they'll complain that their taxes went up.
Right. Yeah. Yeah. Exactly. So let's also talk. So there's also been a lot of news recently about between Canada and the U.S. Donald Trump, obviously.
Yeah.
I don't even know where to begin with this one. I guess tariffs. We're right now in a 30-day grace period that they were going to impose tariffs last week on Tuesday, I believe.
Yeah.
And then they said, okay, we'll give it 30 days and Trump gave the grace period to both Canada and Mexico to strengthen the border, I guess, is what he really wants. And I think you probably know my opinion on tariffs because you've probably seen my posts on X.
Sure.
But I guess let me hear some of your thoughts and opinions on tariffs, the good, the bad, the ugly.
Sure. So, I mean, I think a lot of the tariff talk is obviously it's a negotiation tactic. You know, hit Canada with the worst case scenario, and then Trudeau comes up with this. Well, we'll spend this and this and this at the border. Trudeau thinks he wins, but Trump really won, and Trump looks like the bad guy, right? I mean, it's negotiation tactic. I mean, there's already tariffs between the United States and Canada. I think it's what, like 14% on lumber,
Softwood
10.
lumber has always been a sticking point for BC.
Sure. And then I think the energy we get from you, I think there's always been a little bit of a tariff on that, and as well as the oil. I don't know, is oil like 10%? Or I mean, it's not
That was the proposed tariff.
okay.
Was going to be 10% on oil and energy. So I guess that would be probably the electricity as well coming from Ontario and Quebec, and
Sure.
then the oil that comes from Alberta. So
Yeah. I mean, okay, here's just my take. People can hate me, people can like me for it, whatever. We have to do something. I think the month of December, the last I looked, our trade deficit, and it's mostly China, but our trade deficit for 1 month was 90 billion dollars.
yeah,
So
wow.
yeah, so something has to change. Um, Definitely, I think it would help with American manufacturing. I don't necessarily know that our part, Canada and United States have always been a pretty good partner. And, you had the NAFTA agreement that was back during the Clinton era and everything else.
Hmm.
I think we need to work together better. Let's secure the borders. No one wins a trade war.
Yeah, you've probably seen me post that many
Yeah,
times, right?
no, yeah, no one wants a trade war. But I think if a lot of people dig into the tariffs, I mean, yes, the importers pay it, and they are going to pass it on to the consumer. Now, how much they pass on the consumer is different, and here's where I think Trump's theory is. And I can't call Trump, so I can't
You
can't pick
know,
his brain. But you know, uh, uh, China subsidizes their businesses to stay their cost cheaper than what it would be for America, Canada, or even Mexico to make the product.
right.
So the theory behind it is hit them with a hard enough tariff that China is going to keep having to subsidize it, and eventually they're not going to be able to subsidize it. So that's where he says China's going to pay for it. Their government
Hmm.
eventually is going to have to stop subsidizing. The other thing that's going to happen is I know some people that are importers, and they definitely it's passed on the consumer, but a lot of times if they're importing something from, let's say, China, they're already ahead of the game before they've already have orders ahead of time anticipating this tariff. But what they'll do is they'll be like, okay, 25% tariff. I only want to charge the end user 10%. So they'll go back to the Chinese manufacturer and go, hey, look, you've got to sell this to me for 15%, 20% cheaper than, you know, because of the tariffs. If not, I'm going to find somebody else to do
Right.
it. Now, as these tariffs hit, factories are going to be and subsidies get lower. What they're going to do is they're going to push their prices down even more, which I don't know if that's really going to, help the build in America again. But it's definitely going to have an effect that I
Yeah.
think is positive. Now, as far as tariffs between Canada and the United States, I don't know if that's a battle we need to get into. Obviously, some Canadians like Trudeau, some don't. Just like some like Trump, some don't. And I think right now to be honest with you, I think it's a pissing match between Trudeau and Trump. Um, and I
Well,
think I think it'll
nobody
get worked
watching
out.
this podcast likes Trudeau.
Okay, so you know, uh, I think it's more that it's flexing. I think the talk of making Canada a 51st state, I think's a little ridiculous. Although from what I hear, there are some sections of Canada that say, hey, we wouldn't mind being part of the United States if we got rid of some of the policies that Canada has, the United States doesn't have. But I don't live in Canada, so I can't speak to that.
Yeah, there are definitely people, I've seen it on X, who are in favor of the idea. The majority of Canadians are not. I'm not in favor of it myself. I would be in favor of something similar to the European Union, where it's sort of, you know, in Europe, though, it's I think 54 countries in Europe, and obviously they're not all in the EU, but the majority of them are. And then how would that look in North America? Would it be an economic union between just two countries, Canada and the US, or would we include Mexico, or would there be more countries, including any of the Central American countries or the Caribbean islands? Like, I don't know how that would look.
Yeah, I don't know how it would look either. And, obviously, a lot of countries, because of our defense, kind of, I know Canada leans on our defense a little bit, even though you guys have your own military. And same with Mexico, they lean on our defense a little bit too. So I don't know if if you could spread the cost of the defense out, you know, I just don't know if there'd be an economic benefit to it, to be honest with you. I mean, you guys have a good economy, or you guys have a good GDP. Obviously ours is bigger, but we have more people.
Yeah,
Uh,
10 times the population. So it's
sure,
like,
sure.
obviously, right?
Yeah, I honestly, I don't know if doing, and even if you talk to people in Europe, a lot of them don't like the EU as well. So
Right.
you can't make everybody happy. I don't know. Is there a perfect solution out there? I don't think so.
No. No, you can't please everyone all the time, right? So it's
No, you can't.
I just want to get back to another point in my mind about tariffs and Canada and the US. And so one of the big things is the auto manufacturing. I think you just briefly mentioned it there. And so
Yeah,
what happens? I guess I need to back this up. So I understand the argument for tariffs, like you kind of made there, that okay, maybe we're going to be able to buy domestically, maybe we'll start producing domestically and increase business in our own country. That's the argument for tariffs. Now, my opinion is yes, that was a very valid argument 35, 40 plus years ago. But now the global supply chain is so integrated that that kind of almost blows that argument out of the water. And so my example is in auto manufacturing. Obviously, as you know, Detroit is like the auto manufacturing capital of the US.
sure,
Detroit is right on the border. You cross the Detroit River and you're in, well, it's called Windsor, Ontario. It's nicknamed South Detroit because
sure.
there's an interesting little geography tidbit is Canada is south of Detroit just because of the way the river bends.
Sure. Yeah.
So what happens in auto manufacturing is parts cross back and forth the border multiple times before an automobile is fully assembled. So are those parts going to get hit with a tariff every single time they cross back and forth across the border? So now a car is not going to cost 25% more. It could cost 150, 200% more. And cars are already pretty bloody expensive. Like all of a sudden,
Oh.
a $50,000 car becomes a $250,000 car. It's like, take the bus, I guess.
Yeah, yeah. No, I didn't think of it that way. Yeah, and I don't think that's the problem with some of these tariffs. Is they're not fully. It's not like the plan is not listed out, right? I mean,
Right.
it's a tariff. Okay, so like you said, you take that 25% tariff. Is it if
Is it going to
and
compound 7 times as that part
sure,
crosses back and forth across the border, right?
yeah, yep, exactly. Yeah, Windsor's only about I think about a 5.5 hour drive for us. I know a lot of people go there, and I've heard the joke that it's Detroit, but
Yeah, South Detroit.
yeah, yeah. No, I agree. Like if it's got to come back and forth, and there's no clear defining what that's going to be. Is it just the part, and then once it goes and gets assembled? But yeah, I was pretty shocked actually. I looked into it of how many times some of that auto stuff goes back and forth between Canada and the United States through the assembly process. But I guess it makes sense. I mean, technically, it's really only like going from one side of town to the other. It just there happens to be the
A
river and the
border
border
in
there.
between.
Yeah,
Yeah.
border in between. Yeah,
And Mexico is part of that equation too, because
sure.
they're part of the auto manufacturing sector now too, since like you mentioned previously, the original NAFTA deal from back in the early 90s, right? So
Yep.
I really don't know how that's all going to play out. Obviously, we'll see what happens at the beginning of March after the 30-day grace period has ended. And yeah, well, I mean, who knows? I guess it's tough to
Yeah.
say.
It is. It is. Um, I still say there's a lot of details to work out. So hopefully they come up with something. And the lumber, that's going to affect a lot of people too, because we get so much soft lumber from you guys, that pine and stuff to build. And it's
Right.
already, I don't know what your guys' real estate's like, but here in the United States, I mean, the price of a new home, or even a pre-existing, if someone decides to sell, is the price is pretty high.
Yeah.
And building materials, lumber, which is, I would say, the majority of a house being built, if that goes up another, 10-20%, that's going to pass on to somebody, right?
Yeah. Yeah. So to quickly answer your question, Toronto and Vancouver are extremely expensive real estate markets, on par with the big US cities, of how crazy, you'd basically need $1 million to start looking at something tiny, small, or even $1 million condos, right?
Right.
And but there are, obviously, because Canada is a massive country with a lot of space, there are more realistic um, real estate areas. For example, my house. So, like I mentioned to you, I'm on the north side of Lake Ontario, and I'm about 2 hours east of Toronto. So I'm in a rural area. My house is technically, it's called a 4 bedroom. There's 2 rooms upstairs. It's sort of a 1.5 story. So 4 bedroom, 1 bath, normal kitchen, living room, that kind of stuff. Sitting on I think it's about 3/4 of an acre, and my property is worth about, say, 500 grand Canadian.
Okay.
Now, if you were to put that exact same description into, say, North Vancouver, you're looking at $2 million, right?
Oh, wow.
So,
Okay. So yeah. So I mean, and like that's the same like for an Indianapolis. If you live in the suburbs, um, you're between 350 to 500,000 for
yeah,
a
depending on what you're looking at,
depend
what you're getting.
what you're looking at. Yeah. So yeah. So it sounds like it's pretty close in the same thing. But yeah. So obviously lumber tariffs would increase the costs
Yeah,
for new builds at least. So
yeah, which would just drive the entire real estate market up, no doubt. Now, with that said,
absolutely.
too, you know, we've also had like massive immigration in the last few years, and our population has skyrocketed. Like just a few years ago, we were at 38 million, and we're now over 41 million. And in those few years, 3 million more homes didn't get built, right? So,
Right. Yeah.
yeah, that's caused a problem.
Yeah. And that's one of the arguments for especially for the United States, what's coming across the Mexican border. That's the other argument too, is that we're letting so many people in. That's one of the things that's keeping the price of housing and even rent uh,
Right.
costly. You got all these people coming in and not enough housing for them. Natural supply and demand, so the price of it goes up. So that's the other argument too.
Yeah.
I probably won't take the argument on buying a new house for them, but I'll buy the argument of the rent. So
Yeah, definitely. Well, we kind of got sidetracked there
yeah,
on
we did.
tariffs and real estate and everything. I want to kind of circle back to your career, estate planning, which is kind of we already talked a little bit about taxes, but estate planning, I guess, the two realities of life, the two guarantees of life, death and taxes, right?
Yep.
So what is your take on estate planning? Any advice?
Well, sure. I mean, obviously, too, always check with your attorney or whoever. But I find it interesting. People focus on their portfolios, which I think is great. Everyone focuses on hitting or enough money for when they retire or travel or whatever else. But the one thing that no one really looks into is estate planning. And I think a lot of people think of estate planning as it's only for the really rich. Only rich people do that, and that's not the case. I'm a firm believer that you need some type of life insurance, especially if you're the income provider, you got a couple kids at home, and heaven forbid something happens to you at 40. How's your family going to continue to survive?
Right.
So that falls in line of estate planning. And then you could even look at life insurance. You want to leave money to your kids or grandkids. It's a great tool to generate wealth or leave wealth and not pay taxes on it. So in the United States, life insurance payouts are tax free, and we have a thing called probate. So when a person dies,
Hmm.
if they're not set up right, the courts look everything over, and what it does is it's to say that brother A says, well, brother B doesn't deserve this, and then the judge may decide who deserves the money or not. So it's probate. Well, obviously there was court costs, there's attorney fees, everything else. Even if no one contests it, it still has to go through probate. So one thing life insurance does is that bypasses the whole product, goes to who the beneficiary you want, tax free, no problems. And you know, I say there's like a few things that a person is like non-negotiable you need to have. Now, maybe where you're at in life, maybe you're not ready for it, but you definitely need either at least a will, if not even a trust. Trust is going to come more maybe income and assets, but that's gonna a will. You still have to go through the probate process, but at least it says what your wishes are. You want Sally to have the house and Billy to have the savings account, whatever.
Right.
And the judge will honor that. Now, the nice thing about a trust is it avoids the whole probate process. No one can contest it. No one can argue it. And a lot of times you can put assets within that trust also that could be tax efficient for your heirs. So that's something someone needs to have. But the one thing a lot of people don't talk about, and there's been some heartbreaking stories out there. Some people call it a living will, some call it a medical directive. And basically what that says is if you get into major automobile accident, you have a stroke, and you're on life support, or maybe it's a toss up of what if you should or shouldn't have the surgery. It 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 says what you want
Hmm.
and who you want to make those decisions for you. Because here in the United States, if you don't have that, um, there's a board basically at a hospital that makes what they feel is the best decision, maybe even against the family wishes. Maybe family wants to keep them on life support longer. Maybe they don't. So, that just lets people know what you want, lets the medical professionals know what you want, and also gives someone skin in the game to get that medical information from the doctors to make those decisions. Now, not necessarily, usually a husband and wife's okay, but where I've heard some stories that are really sad is child turns 18, and in the United States, 18 is a legal adult. And one heartbreaking story was daughter went off to college. She got into a serious automobile accident at just over 18 years old, and the parents found out that they couldn't make any decisions for their daughter because now she was an adult, and the hospital board made all the decisions for them, which is very heartbreaking.
Right.
So that medical directive or slash living will is pretty important to have. Most states don't even require it to be notarized, so it's actually a document that and I don't even know if it's even if you go to your medical healthcare professional, usually every state has like the free form on a website, or even your doctor can give it to you. So it's a freebie. Most states don't require notarization. It's a great peace of mind to have. Then the other one that a lot of people don't talk about, it's called a financial power of attorney. And what that does, Dave, is if something happens to you, it allows, let's say you just have a credit card in your name or a cell phone in your name, some bills. If you're laid up for a while or in the hospital, it allows your spouse or friend or another loved one just make financial decisions for you. It allows them to maybe cancel the power in your house because you're not going to be there, or put it, cancel cable, add cable. It allows them to make some financial decisions for you. They can do that. So obviously,
Right.
when you fill that out, you want to make sure it's someone you trust. They're not going to go out and run a bunch of credit up on you. And once again, some states require this notarized, some do not. Now, this document, though, is only good while you are of what they considered sound mind. So you don't
Hmm.
have dementia, you're not in a coma, uh, not being treated for drug addiction or something like that. So the other document you have with that is called, oh, and the financial power of attorney, the person that has it, can revoke it at any time. You can just be like, nope, don't want Betty doing it for me anymore. I want my son Johnny to do it for me. So that can be changed at any time. The newest document is the legal document. So then the other one is called what they call a durable power of attorney. And that actually kicks in when a person either is proven to have dementia, Alzheimer's, Parkinson's, in a coma, just they no longer can think for themselves. And that durable power of attorney kicks in. That cannot be changed at that point. And once again, it lists the people. And what the durable power of attorney does then, it supersedes all the other documents you have. And it's listed in there what, like if I have one and I put, let's say, my daughter as my durable power of attorney, it lists specifically what she can and can't do for me. So, there's a section there. She can make all medical decisions for me. She has the right to my medical records. She can make all financial decisions within my bank account, total. So it gets very specifics.
Right.
But that only kicks in when there's some kind of mental incapacity. So that's an important one to have. That you do probably need your attorney to draw up for you. And most states, there's a few not, but most states within the United States do require that to go through the notary process, witnesses, all that kind of stuff, because it's more of a legal, a solid legal standing document. And that usually can't be taken to court and protested. The judge will just say, nope, this is their thing. And the other thing that I see a lot of people make mistakes. They have nowhere a form listing out all their bank accounts, brokerage accounts, crypto accounts. So I always say it's important within all those documents to
have somewhere that sums it all up.
Yeah, like, I have a bank account at Bank of America. I have a brokerage account with Fidelity. List the account numbers. List how to get into them. You see all the time people, like, they find out 2 years later that grandpa had $500,000 with Schwab, and they never even knew he had a Schwab account because he never talked about the Schwab account. So,
Right.
And also too, in that list, if you have a safe at home with some cash, gold, silver, collectible cards, whatever the case may be, tell people, list out where they can find those. With crypto, especially, where your digital wallet is, whether it's, if you got it on cold storage, what's the 12 unique words? I mean, lay it all out for them. Keep all these documents together. I always suggest to make copies and give them to someone you trust. That way, if you have a house fire, flood, natural disaster, there's at least copies there for people to have. And then we just went through this recently. My wife's grandfather passed away. The one thing that I think that's important too is, and it's not even a legal document, but it's just write out what your final wishes are. Some people want to be cremated. Some people want to be buried. Some people, don't want a funeral. They just want a celebration of life. What music you want. I'd say list all that stuff out for your family. Now, obviously keep it different than your will, because they're not going to read your will later. So a separate document by itself. That way your loved ones don't have to think what you might want or not want. I think it's just kind of a courtesy for them. And in that time when everyone's upset that they've lost a loved one, the last thing they want to do is think about, burying, cremating, what cemetery, all that kind of stuff.
Yeah.
So that's really
a lot
in a
of
nutshell.
valuable. Yeah, I was gonna say that's a lot of valuable information. I do know that a lot of the viewers are from the US, so a lot of great valuable information for our US listeners and viewers. Personally, I can't speak to this topic from a Canadian perspective because I simply don't know enough about it. I know that I'm sure there are similarities, but
yeah. And what I'm trying to do, I'm trying to get some time and partner up with some people. And some of these documents that, don't need an attorney to fill out, some of the simple ones, I'm trying to put together like a PDF with them and probably eventually just offer it to people. Cause I think it's important.
right.
It's, I'm not going to be one of those that's going to, sell the kit for $19.99. You know, I think
Yeah.
it's important enough that people need it, and also these documents are ones that are pretty universal across all the states within the United States. But that's basically
Mhm.
that's how simple estate planning is. Now, obviously, there's more to it depending on assets and everything else. But in a nutshell, that's your basic estate plan that everybody should have. That costs hardly anything to do. I mean, most attorneys in the United States can do a trust and fund the trust for under $2,000, maybe right around 2,000. Those durable power of attorneys, I know a lot of attorneys do them for like $100. Yeah, I mean, really, in the grand scheme of things,
Which in attorney talk, $100 is free, right?
right. Yeah, yeah. So a lot, and then you got the cost of notary, but a lot of it's not expensive to do. I think a lot of people just have that misconception that it costs tens of thousands of dollars, and that's not necessarily true for a basic estate plan. Um, probably out of all that, you're probably long-term cost, your most expensive is probably going to be your life insurance, the paying premiums every year for many years, but
Hmm.
it's pretty inexpensive.
Okay, well, so we've talked about taxes, estate planning, and then on the thumbnail, if you're here this far, you've obviously clicked on that thumbnail. You saw it this morning when I sent it to you, Jesse. It
Yeah.
said just finances as well, because that's part of your X profile as well, where you just try
Yep.
to kind of have finances in general. So let's just open it up to, I know that's a big can of worms, but
It is. I was actually on well, it was Tom the savings captain. Now he's Tom the savings tiger.
yeah.
I don't know if you listened to his podcast, but I was on it a couple of weeks ago, and we
Tom
kind of
is awesome. I've been on his podcast. He's been on here. He's been on here many times. So yeah, and actually, he told me that, or you told me that you were going on his when we were trying to find a date
yep.
to record this one. So
Yeah, so the one I was on just about 3 weeks ago, maybe. Yeah, because he had the newest one on Starbucks, and he's got another one will come out on Monday. It was fun, and we kind of got into a little bit of basic portfolio talk, and it was fun. Just kind of discussed, the thing with personal finances is you see so
personal,
many. It's personal. You see so many people. I'm never one that says this is what you have to do, Dave, because
right?
I don't know enough about your full financial thing of what is good or isn't good for you. Now I like to share ideas, and you decide if that's good for you or not. I know you like bank stocks, so bank stocks might not be for me. So to say that this is the only thing you have to do.
I like Canadian bank
Oh
stocks.
yeah, Canadian
The
bank stocks.
Canadian
Yeah,
banks, just all they do is make money hand over fist. They make billions of dollars per quarter.
I've heard that they're cash making machine. So
Yeah.
uh, so I sometimes on X I cringe when someone says, or the common one, VOO and chill. That's all you need to do. It's great advice, but that may not be the best for you, for me, or for the person that's reading that.
Right.
And the approach I take, and Tom and I talked about this kind of in detail, and I made a post about it. I don't know if you saw it, but basically, for long-term investing for your retirement, I kind of like what it's called it's called a core satellite portfolio. It's proven that it's been back tested. It's proven that it's a great way to get ready for retirement. I don't know. Have you heard much about that strategy, Dave?
Not exactly. I'm sure I've scrolled through posts on X about it, but
Sure.
you don't always absorb everything.
No, you don't. And amongst a lot of financial planners, this has kind of been the new. I don't want to use the word buzzword, but it's kind of perking up ears. The old method was the Benjamin Graham. You had total stock market index, you had bond funds, and you had international funds. But back testing has showed now that that's not performing well. I mean, it's a good portfolio. It's a very conservative portfolio. Uh, but bonds just haven't, at least in the United States, and most of them are, United States bonds, just haven't performed well because we've had such a good bull market, and they just haven't performed well. So this
Mhm.
portfolio idea, it's pretty simple. It's just taking 25% allocation to either a total market EFT index fund or an S&P index fund. So, VOO, FX, AIX is Fidelity's, VTI, one of those, just a either broad market or S&P index, 25%. Then the other 20% is allocated to growth. So MGA, FTEC, one of those, your favorite growth fund. You can even probably throw in there QQQ or QQQM, but growth. And then 20% diversified in dividends. So like SCHD. A lot of SCHD gets a lot of hate. But once people understand SCHD, it's great in a portfolio. It's your hedge if the market goes down. It really honestly is. It's going to perform well in a flat to down market compared to the S&P. And then just about 5% bonds to stay conservative, and 5% real estate. Now, whether that be most of the time, whether it's a EFT that's based on a bunch of REITs or an actual real estate investment trust. So that gets you to 75% of your allocation. And then the other you pick 5 stocks, and I'm talking good quality stocks. So, Procter and Gamble, possibly a bank, a financial institution stock. You just your core blue chip, and you just allocate 5% into 5 stocks. And the goal is,
that's a very well diversified portfolio.
It is
with very minimal risk because you're spread out in so many ETFs and index funds.
Yeah. And here's the crazy part. This is the part that really gets interesting. So it's a good way for someone to start. So, so let's say a person starting in, in their late teens, early 20s. The key is the first year for this, you just try to do $150 a month. You get comfortable, you get the automated savings. Now you can always do more, but the key is at least $150 a month. And then the second year, you bump that up to $250 a month. Once again, you get comfortable, get your bills adjusted. You're maybe starting a new career, got a family. You get used to that. And then the big one comes about at year 5, you bump it up to $550 a month. By then you're comfortable, you know what things are at. Now you could always do more, but the key is $550 a month, year 5 through 9.
Okay.
And then year 10 through year 15, you bump it up to $650 a month. Now here's the cool part. So after that 15 years of doing that, you'll roughly by back testing and depending on if you added more or you missed it, but if you follow it, you're going to have about $175,000 that you've put into this. And that's where your account, and with some growth, that's about where your account's going to be, $175,000. If you didn't put another dime into it and let it ride 15 through year 30, roughly, based on back testing and what the markets do and everything, that's going to have $723,000. So basically, wow. Spend 15 years of your life. Don't ever touch it. Don't ever put any more in. You're going to have $723,000, and roughly at a 5% draw every year off of that, that's giving you about $36,000 a year income. So just imagine if they did it year 15 through 30, what it's going to be.
If you keep adding for the additional 15 years, wow. Yeah.
And then even, some people, once they hit that year 15, they back it down a little bit because, there's other things that they want to do, or, now they're starting to save for their kids' college. But the key is if they start young enough and really do this and follow this portfolio, you're going to retire as a millionaire. Right. Excuse me. And it still allows you for when life happens for kids and stuff. It allows you then to focus on, your health savings account, your college 529 plans for your kids. It really puts people in a really good position.
Yeah, interesting. It's the power of compound interest, right? Or
sure.
Power
Absolutely.
Of compounding.
Absolutely.
It's unreal.
It is. like I said, without knowing, I'm not saying that every person should do this, but there's some solid numbers there that are showing that it's performed well, and it kind of gets it out of the way.
Right.
Yeah.
Okay, before we wrap up, I have a couple skill testing questions for you.
Yep.
So we were talking about banks and Canadian banks.
Yep.
Bank of Montreal is one of the big 5 or big 6 Canadian banks. They've been paying the dividend the longest out of any of the Canadian banks. Can you guess what year they started paying a dividend?
What year they started paying a dividend? I'm going to say, and you said they're the oldest bank in Canada?
They've been paying the dividend the longest,
The
and
longest?
they're one of the oldest. But yeah, so
1930s?
just back it up by 100 years.
Really?
1829.
Since 1829, they've paid a dividend.
Yes,
How
sir.
much does that? How much does the dividend go up every year, or how much?
Oh,
What's the dividend
I'm
go?
not even sure right now. So obviously, in that nearly 200 years now, they haven't raised the dividend every single year, um,
Sure.
and because they are, like we've already mentioned, they're just cash cows, money making machines. They don't raise the dividend unless it's like makes 101,000% sense to do so,
Okay.
right? So,
Wow.
yeah.
So people talk about dividend kings and dividend aristocrats. Boy, they beat all those out of the water, don't they? Holy cow!
Yeah, and
That's
so then
amazing.
the other big big 4, big 5 banks have all been paying dividends since 1829. Then Bank of Nova Scotia, I believe, was 1833, maybe 1830, and then CIBC, I think, was in the 1850s. Um, Toronto Dominion was around there as well, maybe 1840s or 1860s. Royal Bank was, I think, 1870. So they've all been paying dividends for over 150 years, and Bank of Montreal is now coming up close to that 200-year anniversary in 4 more years. So,
Huh. Now, did that money laundering news have with TD? Did that affect it much? Or
oh yeah, yeah. So, well, as you probably know, so obviously TD trades in both New York and as well as Toronto,
sure.
and the stock dropped in both countries, obviously.
Okay.
Um, the fines and the penalties are more restricted to their business in the U.S., but it still affects their company, their brand, right, in Canada.
Sure.
So,
Yeah. No. No. Yeah. I figured it affected brand. I just didn't know how it affected it up there in Canada. So
yeah, it was mostly just the stock price dropping. And I mean, does that create an opportunity to buy, or do you just wait it out for the next year or two, or what? Like I say, the penalties, I believe, I'd have to go back and double check, but because this is going back several months now, but I believe what I read at the time was that the penalties were restricted to just their business in the US.
gotcha.
So, yeah.
And I'm sure if I remember, it really was. I mean, for a bank, it really wasn't uh, big numbers either. So I'm sure it's not even going to affect their bottom line. Really, they probably had that tucked back for fines.
Yeah, exactly, right? So, okay, one more little fun skill testing question. So the Canadian banks paying dividends since the 1829 to 1870, whatever in those years. What year did Canada become a country?
I'd have no idea, to be honest with you.
1867.
Okay.
So the majority of those banks have been paying a dividend for decades prior to Canada even becoming a country.
Wow,
Yeah.
that's crazy.
I know, right? It's so unreal.
Yeah, and the stability of them too. I mean, we got regional banks here all the time that just go out and under. Even some of the, I mean, heck, even the banks too big to fail.
Yeah.
Even Goldman struggled there for a while, and Lehman Brothers and stuff like that. That's an AIG. That's amazing that through.
Yeah.
I mean, they've been through all economic times too and
Oh
survived.
yeah. Like yeah, everything from the Great Depression to the 2008 financial crisis and everything in between.
What's the dividend yield on most of those stocks on average?
It's in that 4% range, I think.
Okay.
Yeah,
So
3 to
yeah,
5.
3 to 5. Yeah.
Mhm.
So that, yeah, now I see why you really are really, passionate about them, because the stability, a very good dividend rate, really, if you think about it.
Yeah,
Or at least one that's always going to be there. I mean, it's not a dividend trap, right? I mean,
that's right.
uh,
And
so
I
you
think for our American viewers, I'm quite sure they all trade in New York as well. So if you're interested in picking them up,
yeah,
you can
no,
get them in US dollars, right?
yeah, no, I might, I might take a little peek at that.
Yeah,
That's
take a look at them and see what you think. Let me
yeah.
know.
Normally I stay away from banks. I mean, it's just not my style in my investing. Also, just the uncertainty of them over the
Right.
years. But you might open my mind to some Canadian banks. That's some really interesting statistics.
Yeah, yeah. Well, this has been an absolute pleasure chatting with you
Oh, it's
here
been
today.
fun. It's been
Yeah.
fun. I enjoy it. Kind of got on our little soapbox about tariffs and taxes, but
Well, that's okay. That's okay. Definitely, definitely want to get you back on a live stream. Live streams are a ton of fun. Like I was saying
sure.
earlier, you get a few other people, and
You
you just have a nice little around the table discussion with a few people, and yeah, those are a lot of fun. They sometimes can get a little lengthy because people like to we all like to talk and listen to
sure.
ourselves and hear, but also hear each other's ideas and opinions, right? So
Yeah, you did one a while back with drunken dividends, didn't you?
yeah, yeah, Willows and Anthony. I don't know if you know Anthony or not, but
I don't.
yeah, so they're both in Canada. Willows is in Winnipeg. He's a wine manufacturer, hence the name on X, Drunk
Drunken.
Dividends.
Yep, I saw that. Yeah.
And then Anthony at Newcomer Investor, and he calls himself Newcomer Investor because he's a newcomer to Canada, but he's been here for 10 years, and he's like this close to having his full citizenship. So he's not
Okay.
really a newcomer anymore.
Yeah. So is that
But
about what it takes in Canada? About 10 years to get your citizenship?
I honestly don't know.
Okay.
I got my citizenship the day I was born. So
Sure. Right. I understand. At least you guys have a process.
yeah, yeah.
Awesome.
Well, again, thank you so much, and
Yeah.
definitely we'll have you back on again, and we will see you around the X world.
Yeah. Hey, thanks for taking your Sunday to chat with me. But yeah, Dave, anytime, man. I would love to get on a live stream, or anytime you wanna have another chat, let me know. I'm down.
All right, awesome. Thank you again so much. And if you're all
Hey,
still here watching and listening, be sure to hit that subscribe button. You've spent an hour with us. You must like us. Hit subscribe.
thanks everybody.